Hello and welcome to TheoTrade. My name is Doc Severson. This is the Theo Night Report for Wednesday, August 3rd. Okay, so what's going on this week that we have to be aware of? Well, I think the market is starting to anticipate and ramp into the jobs report. If you recall, last month on the 8th of July, we had this huge 287,000 report for adding jobs, right? And that blew way above expectations. That was, of course, after we had the June report, which is like 38,000, which actually got downgraded last month, but nobody cared. They just focused on this big number and saying, hey, the recovery is here. So we'll see whether or not we can sustain this type of number. Obviously, the market would receive that very well, even though more than likely it's going to start to increase the probability for a rate hike in the September cycle. Now, right now, looking at FedWatch, we only have about a 12% probability that we're going to be hiking rates in the September timeframe. All right, and that only goes up to 13.6% in the November. I don't really think that they're going to do anything right before the election. So the Fed's got one shot here, and if we see a really hot number coming in again on this Friday, I think we're going to see a very, very high number here, probably around 50%. So this is going to shoot up from 12 to somewhere around 50% if we see another hot number, because really at this point, after playing around with this, the Fed has more than warned us that rates could hike by a quarter point sometime by the end of the year. I think they've put that on the table in a very clear fashion. So in the past, when we've seen a really hot number, it's bad. It's good news is bad news because nobody wants the rate hike. But at this point, the Fed has been so transparent, beyond transparent with this, that I think the market's just going to shrug that off if they do start to hike rates. Now, yes, you can extrapolate through there. If they hike rates, then the dollar is going to go up and it's going to make imports more expensive and our earnings are going to go down. But we've been in an earnings recession for the last, 5 quarters? So nobody seems to care about that. All that means is that more capital is going to come flooding into the U.S. stock market. Okay, so what are we seeing right now in the U.S. markets? Well, the best indication of that is going to be on the S&P 500. And after, of course, there is the last jobs day right there. That was a huge move, right? So we had a lot of momentum that came from this consolidation straight up to here, right? And then we've been consolidating now for about 2 straight weeks. Yesterday was a red candle and everybody just about lost their minds because they had forgotten what a red candle looks like. But honestly, when you see breakouts above a very important level like this, very often they come flaming back down here to retest that level from above. So I'm not saying that it necessarily has to do that right now, but there's no way that the trend has changed yet. We will know if the trend has changed. Something else to keep in mind here is that tops are a process. Bottoms are an event. So that's just one of the truisms of markets and how they move, is that bottoms are a process. They're very short and sharp. Very brutal, very short, very sharp. But there you go. Bottoms are an event, so it's a singular event. But notice how all of these tops along the way, market tops, are just brutally volatile. It's a process. A market top is a process. It takes weeks, if not months, for this to play out. So this had some potential to be a market top up here. But of course, as we know, eventually with the Brexit, it got flushed out to the upside. So I would say as long as the market holds up above about 2100 here, because that was the ceiling here was 2100 for the longest period of time for the last year and a half. And as long as that level holds, I wouldn't be surprised to see this tested from above, bounce back up. It can do anything it wants to, right? But if this is going to be a top, we have just now started the process of building that top. Now, anything can happen in the markets on a day-to-day basis. What I can't speak for is some kind of exogenous event which comes out of nowhere and completely rocks the market. So anything can happen, but on a day-by-day basis, We do not see market tops being a singular event like that and just coming down here like this. It just doesn't happen. It just doesn't work that way. So where I would get concerned is if we did come down here to test this level from above, and that sets up a lower high, and then that rolls over. That would be a dangerous signal there if that level starts to fail. So if we don't bounce very strongly off of any test to the downside, not saying it's going to happen, but if we don't bounce very strongly off of that test, then we're setting up for a potential lower high, which is a dangerous signal. But again, this could take weeks for this to set up by itself. Now, it's no secret that there's really very little volatility out there to sell. So for those of us that are making our living through selling things like iron condors, these are slim pickings these days. It's kind of like crawling through the Sahara looking for water. It's the same kind of thing. So what we have to do is we have to take a different approach. And we're not afraid of being directional. And so we have a very methodical approach towards being directional. Something like this, where we have the GLD, where we have a monthly swing heading higher. So this is kind of how we play this out. We have a monthly swing heading higher. So we're just going to take a ride along with that monthly swing. And then within that monthly swing, we have a weekly uptrend. So this is a weekly uptrend. So we have higher highs and higher lows within there. So we're going to take a ride on what we call the parent time frame. So these are both heading higher right now, at least for right now. And so what we want to see is we want to see some little consolidation pattern or pullback that shows up on the daily chart, which is going to be our signal chart that we're going to enter from. And so we saw this actually last week. This is more of just I don't know if you'd call this a bull flag pattern, but it's definitely a little consolidation pattern, which is heading in a downward channel. And that is well above support at this level here at about 125. So we went long on this around this price right there as it started to break higher. And as of yesterday, we took off the trade for about a 42% gain after just about 3.5 days. So not bad. I mean, if we can be precise with things like this, we have limited risk on these trades, and we're just looking to do these. We're looking to take very small directional risks with defined capital for these trades. And it really doesn't matter what the level of volatility is because we're using these very benign at-the-money debit spread trades that really are very indifferent to the level of implied volatility. Whether it rises or falls during the middle of the trade is immaterial. So that's one that worked out for us very nicely. We're still in one which is not working out right now. This was a bearish trade that we took on the financials, and we set this up against the trend line. We were expecting it to fail at this descending trend line and at least come down here a couple of points, which would be good for a nice 40 to 50% return for us. But so far it has not moved. And in fact, I would say at this point, based on this higher low sitting up nicely and a very bullish consolidation pattern underneath resistance, this looks like it's setting out to break to the upside. So we are still holding this position with long puts looking downward from this. So we'll be in position to take a profit if we continue to move down from here. But if it does break higher, then we don't want to be just so completely wrong-footed that we can't take advantage of something like that. So I could look out to something like USB here, and USB, if I see it breaking above this descending trend line, notice how neatly this one plays out. This is a very precise little trend line. And what the choppiness index down here shows me is that this has a tremendous amount of potential energy for the next breakout. So you think of this as a spring just being coiled up under tension and being just about ready to explode in your hand, right? So this is typically a setup where we would see some type of move in a strong fashion out of this, because there's a lot of this pressure just sort of, it's almost like a pressure cooker waiting to explode and head up to here again. Now the trick with this trade is if we're going to take this one, we have a dividend that's being paid at the end of August. And so we have to avoid that. So we've only got a couple of weeks or so, maybe 3 weeks at the most, to be able to get in, get our fair share, and get out of this trade. But if we have a high degree of probability of watching this thing explode from here, then it may be worth the risk. So we'll take a look over the course of the next couple of days with this one and see if we could do something with the USB and maybe set up something like, if we look at let's look at maybe the 41.5. So we'll look at the 41.5, 43.5 debit spread, and we can get that for just a little bit under $1. So this is a case where we're risking one to make one on this trade, a high degree of probability that we're going to see, if we see the expected move here being less than 2 points. So if we bring up the volatility graph for USB, we can also see that with the blue line here, we have relatively low implied volatility. We certainly don't have a peak over here, and we can see in the IV percentile, it's about 10%. So this is definitely in the lower 10% of the values over the last year. So we can see that there's relatively low implied volatility. So what we can see with this trade is that this is the sort of setup that we want to look for, where the market and the option chain is not expecting much movement, but just based on the technical read from this, that I believe these are the types of setups where nobody is expecting what typically happens. And if this is able to get above and beyond here, it could be a dramatic move, at least dramatic as it relates to US Bank. So anything can happen from here through the end of this week, but I would anticipate a continued grind into the report on Friday. So we'll see what happens and we'll report. Thanks for listening to today's video. We'll see you tomorrow.